Tony and Miguel, I appreciate this opportunity. I am a customer of Wintrust. I really believe in that bank. When they told me that they take time to educate and work with the customer in a very serious way, I was impressed with that, because it's hard to find traditional banking that gets involved with you, helps you and guides you without even charging you. So I was very impressed with how they educate their customers, and I hope this is one of many opportunities I have with Wintrust. As he said, I have had several companies, a lot of startups, and sold off successfully pretty much all of them. And I'm here to talk about small businesses, whether you own one or you're an entrepreneur and you are living on the edge, as I have for 30 years. I just want to give you some insight in what it's like to be an entrepreneur, find success, and grow your business. One thing that everyone probably shares as a small business owner and entrepreneur is experiencing failure. And there's nothing wrong with that. You'll see as I go into the slide presentation, I talk a little bit about that, but it's important to understand that. I put this on the screen to define how I define what it is to be an entrepreneur. Living on the edge, but with confidence. When I start up a company and I start to get comfortable and get further from the edge, I have a tendency of wanting to get out and get closer to the edge. That kind of defines an entrepreneur versus a small business owner. I put this up here because most people appreciate this slide, and they live it, whether you're a salesperson or a business owner. Whatever you do, we have the ups and downs every day. And emotions run high. Insecurity as an entrepreneur or small business owner is sometimes obvious. And even though I've had a successful 30 years, I still live this. And it's unfortunate that we go through this. Let me ask you something, a show of hands. Who is a small business owner, so I know who my audience is? Oh, wow, oh, that's exciting. All right, that's what I was hoping to see, is a lot of small business owners, because you'll appreciate what I'm about to say. I'm going to try to not only inform, but educate and motivate all of you to be a successful small business owner and entrepreneur. At a show of hands, who considers himself an entrepreneur? There's not going to be a lot of audience participation. Entrepreneur. See, there's a difference in the hand holding up your hands when you talk about a small business owner and entrepreneur, because entrepreneurs, most small businesses start off as an entrepreneur, but as they get involved as in the business, they become less of an entrepreneur and a small business owner that wants to build it up, hand it off to their kids, or just make it a cash cow and just live with it forever. A lot of entrepreneurs get uncomfortable after about 4, 5, 7 years, try to get out and move on, or they try to grow nationally or internationally in sales. So the reason I ask that question is because there is a difference between being a business owner and being an entrepreneur. And if you read that briefly, you'll see that we all start off as entrepreneurs, but as we go into owning a small business, it's a little bit more complicated. We're living on the edge a little bit more. We're a little bit more innovative, and we want to just take it nationally. And if you've met any of the young millennial entrepreneurs, they feel like we're all going to solve the world problems very quickly. And as an entrepreneur, we all kind of think that way. So there is a big difference between being an entrepreneur and being a small business owner. If you have that many business cards, then you are definitely a serial entrepreneur. That's my past, and I'll get into that. But if you want to, I have my cards on the table and the brochure. It's a little pocket-sized brochure. My business life has been reduced to a pocket-sized brochure now because I've been through so many. This is a good indication that you just keep on moving into the direction of opening up businesses and progressing in life. Over the 30 years, these are the companies I've opened up and successfully have sold off pretty much most of them, and whether it be large or small. Before I get into this, my background, the big story was I created a company in 1986, an international mail company competing with the USPS on sending mail overseas back in '86. Ronald Reagan and Edwin Meese back then broke up the international mail monopoly with the post office. I was with a courier company that had a division moving mail. So I came up with an idea. My only customer in Waukesha, Wisconsin, had clients. He was moving mail for his clients. And I said, well, how about if I take your client's mail, get it prepared for the international remail business, which is what it was, and take it and give it back to the company I used to work for. And that was my first aha entrepreneurial moment. So we each put in $500 at a bank up in Waukesha, Wisconsin. And the lawyer set up the LLC, and for $1,000 we opened up a checking account. The $500 I couldn't afford. My fiance at the time gave it to me because I had quit my job. I didn't have any money. I just asked her to marry me about 3 months prior. And for my birthday, November 14th, 1986, she gave me $500 to go up and start your company. So I started it with my original partner, drove around, did sales, did operations, sorted the mail, brought it down to the airport. And within a year or two, I brought it down to Elk Grove Village, brought on a partner. He put in $75,000 that his father gave him. He owned half the company. I gave up half for $75,000. At the time, it was a lot of money. We started growing the company to $250,000. We got it up to $500,000. We kept expanding our facility in Elk Grove by 10,000 square feet. We started hiring people to do the stuff that I didn't want to do, and then start hiring people that were smarter than us to help us grow the company. So we took my $500 investment, and we were able to build up a $21 million company 19 years later, and successfully sold it off to Pitney Bowes, the postage meter machine people. We were very thrilled to get a phone call after Pitney Bowes called and said, we'd like to take you out, because UPS called and said, we'd heard you're in play, we'd like to take you out. So that was my first taste of being an entrepreneur and selling off a company. We had 130 employees, and we were maintaining 60,000 square feet. Sold it off in 2004, retired at 47, got bored very quickly, jumped into the restaurant, and bought into a Mexican restaurant out in California where we have a primary residence, and got into that, did just the sales and marketing, brought social media into there, and I just sold the shares back to my partner about 2 years ago at age 57, and my wife says, what do you want to do now? I said, well, I could consult, I could help people out, and I'll go through some of the things I do, but that's my background of the big company, and I've had several other little companies. But the intent was to grow it and to sell it. A lot of people do not grow to sell their company. They grow just to hold on and be successful. I put this up here because that is a fact, and I want to thank the small business owners for what you do. You are the engine behind the economy. Those are statistics, and those statistics don't lie. And if you watch, whether you're watching CNBC or any business report, you will see that small business owners are the engine behind the economy. So I congratulate all of you for taking that risk, living on the edge, and helping out our economy, because it's without you, we wouldn't be growing. We're in interesting times now, but thank you very much. I talk about failure because I think it's important that you understand a little bit about failure. We all experience it in our lives if we want to live on the edge or be a small business owner. The image on the left really identifies if you don't have a plan and a strategy for success, you probably will fail. And I like that image on the left because it grabs the attention of people that just don't have the commitment to execute a solid business plan for success. The image on the right is how I live my life. If I feel like I'm seeing failure, I don't look at it as failure. I don't use the word failure. I don't know really how to spell it. I just look at it as a situation that allowed me to learn from something so I don't do it again. And I put that up there because you have to look at your success and failures in the same perspective. And the failure is just a learning tool. And I can't emphasize that enough. Just look at it as something that didn't work, move on, regroup, and that's what I do. If something doesn't work, I kind of pull back, regroup, and move on to the next business opportunity. When you're growing a small business, this seems to be a principle that people pick up on as I meet my clients and I make presentations. They like the tag your it principle. Does anybody understand or have ever heard of tag your it? I mean, I think it's a game or something, but when I started hiring people, and as I hire people, I would literally touch them on the arm and say, tag your it. And they go, what do you mean? I said, well, now you're going to do the stuff that I don't want to do, because I need to pull back and start becoming executive and growing the business forward. So that's what I started doing, is touching people and saying, tag your it, and I got tired of hearing that. But I said, one day you're going to touch somebody and say, tag your it to a manager. you're going to be a manager, and you're going to say, I can't do it anymore. David needs me up here, and now you're going to do the stuff that I was doing. So that's part of the process, is the tag you're at principle. And it's very important. We talked earlier, and you have a business. You've had businesses in the past, and I'm sure you understand the tag you're at principle. Hire people to do the things you don't want to do. Then I started hiring very smart people that were smarter than me when it came to finance. I hired a controller. He was a CPA. I hired an HR generalist, because we had up to 130 employees. So I realized I can't do it all myself. So then I hired a VP of operations. So I started, and this is what Jack Welch talks about when he was CEO. And I read that book, and I said, yes, you can't be the smartest one in the conference room. You just have to keep on building up your organization so you're not the only one with all the answers. So I was able to have a good level of middle management. I created senior staff because I didn't want to. Have the obligation to dealing with 7 managers. So out of the 7 managers, I pulled about 4 out and made them senior staff and said, I will meet with you. We'll go over policy, procedure, and goals, and then you can meet with the middle management, and they could pass it down to the employees. When you have 130, you need infrastructure like that. And then within 2 years before selling the company, I said, you know what, answering to the salespeople, the 7 salespeople, and the 4 or 5 senior staff, I said, let me just pull 2 out, and I'll just answer to the 2, my vice president and my controller, and they can meet with senior staff. So that's what I did, and it was very effective. If you understand the tag you're at principle and you apply it as you grow your business, this is not easily understood or accepted by a lot of small business owners or entrepreneurs, but as you build up your business and have people run it for you, then you're able to work less and make more. A lot of people say, well, you got to work hard to make more money, or work harder to make more. I don't agree with that. We all do when we start up a business. We all do in business in general. But if you can try to implement the tag your principle, you will certainly have an opportunity to pull back and be able to become an executive, take care of sales, take care of marketing, whatever you have to do, without doing the day-to-day stuff. So I put out the work does anybody disagree with this? I get some interesting looks. Do you like it? Yeah. It should be, but it's not. And people say, oh, you got to work smarter. Well, that's true, but are you still doing the same stuff you were doing 3 years ago? Yes.
Some businesses require a little more attention than others from the upper management.
Yes, but correct. You have management to handle a lot of the tasks. Listen, at one point I challenged my company and just went out to our house in California for 30 days. I said, unless the place is burning down, because if you have managers taking care of various tasks, but as an owner, you still have to babysit and set up policy procedures and implement the goals. So yes, you are correct, but it's a balance. It's a very interesting balance of doing less and making more. My goal was to pull myself so far out. The bottom line, and this really relates to Pitney Bowes when they bought me within probably 3 weeks of the sale of the company, and it was a very quick sale because I had an infrastructure and I was easy to buy. They said, David, the good news is the company really doesn't need you because you only have 2 people answering to you, and obviously they don't even let you in the conference room when they have meetings unless you're part of the agenda. The bad news is when the money's wired, we don't need you. So they didn't give me a contract. They said, we're taking out of email, never talk to an employee, and get out of the industry. That is a perfect exit strategy. Perfect exit strategy. Our goal was, we set up to sell off. We wanted to sell off. My brother's company, who was my competitor, wanted to buy me at $12 million. And I said, no, I'm not ready. I want to get to 25. But we couldn't get over that 21 million mark. So when I got the call from Pitney Bowes, 5 years after my brother asked to buy me, because we were at 21 million, we just couldn't get beyond that. I said, it's time. I was with my partner 19 years, and that's pretty much it. So we were ready, and we had such a beautiful setup. It was easy to take over. At 21 million, people wanted it.
And was the 21 million like a multiple of your revenue?
Back in the day, at 2004, I will just tell you that I got 9 times earnings. That's pretty hard to do nowadays because of this success in the organization. Let me move into this because I don't want to take too long. I like this cartoon when it comes to marketing. I make sure that every company I build is started on a bar napkin. I like the concept because if you can't take a bar napkin and use the front and back to create a basic outline or strategy, then it's too complicated. And I just talked to Angel Investment Group out in the suburbs, and they said, that's funny because we started our company on a bar napkin. So I use that because it's true. Just keep your program simple, and just at least come up with a plan for marketing that will be able to be executed. These are the simple P's of marketing. I'm sure many of you understand that and have seen that before, so this is probably nothing new to you. But it's something that I talk to my clients a lot about because they don't have a marketing plan. They don't have anybody in marketing to take care of the exposure that they need. But this is some basic guidelines to follow. It's just definition of marketing. One thing that I think it's important, and I speak on this a lot, is you need to get social media into your marketing plan. Rich is his wife, Rosemary. She's a wonderful, talented artist that goes to weddings and events and sketches, and she's very busy and very active on social media. And I watch that, and I congratulate her on that. That's one of the keys to her success. Whether it's Facebook, LinkedIn, Google+, at the restaurant, because I started a Facebook business page and started attracting people coming in with their mobile phones and showing these little discounts. I was able to increase the revenue of the restaurant that way and bring in the younger people, the mobile phone generation. Because at the restaurant, they were mostly elder people that were retired and didn't really understand social media. So I think what you should, whether it's Facebook, Twitter, YouTube, whatever it is, understand that the middle line, ROR equals ROI. The new return on investment is really seen through engaging and return on relationships through social media. Once the buzz goes out, it's important because that does build an audience. I have an audience, and when I speak on LinkedIn, if you need any information about me, I have my card and my brochure there. But when I speak on social media, I have a decent sized audience, not the ones that most people but I'm happy with it. I'm happy with it. And I speak on LinkedIn probably twice a week, Google Plus every day, my Facebook business page about once or twice a week. I don't blog. I don't have time for blogging. I'm not going to hire someone. I could give them something to talk about every week, but I don't have that. But please, I encourage you to get into social media because it will increase your sales and lead to a greater return on investment. A little bit about sales. It's a good cartoon. I get a lot of chuckles out of that one because people don't concentrate on sales as much as they should. Sales is the engine behind your business. I had eventually had 6-7 salespeople, and salespeople were really at the top. I kept salespeople up here, and they fed the company because without sales, we don't have jobs. We don't have operations. We don't have employees. We don't have customers. So it's interesting with sales. There's and then I set up customer service representatives for each salesperson because they were so busy. I didn't even want them to draw up their own proposals or answer the phone. I just wanted them to stay out in the field, sell, bring in the business, and then have their phone calls go to your customer service representatives, your CSRs, and let them handle the paperwork, handle the phone calls, and go write and submit the proposals without even you, and they'll text you or email you and let you know what's happening. So it is important, but I kept sales really at the top. A lot of people put operations at the top, which is not the case, or they put their employees at the top, which I'll get into in a minute, which is important, but without sales, it doesn't funnel down. When I meet with clients, and I speak, I talk about these techniques or methods of increasing sales, whether you own a restaurant and you're using social media coupons or you're having weekly specials that you're inviting in here. I talked to Sal, the owner of this fantastic cafe, and then they have a lot of fun with specials. Or if you have a company that has salespeople, get your commission programs going, and do what you have to do to provide the incentives for the salespeople and get sales going. It's important that you not only set up sales goals every month and year end, but you really concentrate on reaching those goals. So if you don't have goals, monthly goals, and year end goals that you're trying to attain, then you're not really benefiting your company. A lot of people just kind of make it up and go along as they go. And if you're stuck at 200,000 or 150,000 or 500,000 every year and you're really not growing, you haven't understood how to increase sales or motivate. Production, operations, if you're doing something in the back of the warehouse, if you're making something, manufacturing something, distributing something, whatever you're doing within your company, there's operations. Even there's operations within your organizations. There's people within the company that are taking care of the day-to-day operational tasks. There's a lot of things that you need to do. I like the 2D principle. Make sure you have two people within operations that know the same task and have the same responsibilities in case one doesn't, if someone calls in or someone's not able, or they leave the company, at least you're too deep and you have a backup to that. The other thing is, what's important, and I encourage this all the time, is set up task manuals, job manuals, have everyone jot down on a 3-ring binder or a spiral notebook what they do every day. As I say, I used to say, and I tell people, if someone gets hit by a bus tomorrow, God forbid, all you do is bring out the spiral notebook and tell the new person, here's how you do it. So it's important that you understand how to make production and the warehouse activity very effective and efficient. And of course, the easy part, I think it's easy, is negotiating with your vendors. Every year, especially during the downtimes, was 5-6 years ago, everyone was negotiating rents, everything, products. It was bad. But even don't stop. I encourage every owner to negotiate with every vendor, whether they're supplying you with bathroom products, or they're supplying you with kitchen products, or supplying you with boxes, whatever it is. Negotiate every year and peg them against another competitor. I have a tendency of pretending there is a competitor out there when there's not. They don't know it. I go, well, your competitor's at 5 cents a pound or 6 cents a piece, and you're at 8. You need to come down. They don't know. They'll come down just to keep your business, but it's about relationships. If you have a relationship with them, it'll work for you. It'll work. A little bit about employees, and this is something that's near and dear to me. I was able to grow the company because I took care of my employees. Make sure that you put the employees right there, front and center, and they're devoted to you. You take care of them. Here's just a couple things that I did, and I've encouraged, and because people are with me, 15, 18 years. I set up a 2-year anniversary club, a 5-year anniversary club, a 10-year. HR would come to me and say, David, there's a bunch of us going on 15 years. What are you going to do for us now? I go, what do you want? And I gave them watches, I gave them vacations, whatever, because nobody, 2 things I can say about my businesses is that the employees never left and my customers never left because I took care of, customer was number one in all my businesses. So it's important that you take care of the employees, appreciate them. The bottom line item, I don't know if anybody familiar with stock appreciation rights, phantom stock, has anybody heard of that? No, I didn't think I'd get any hands on that. Talk to your attorney about that. If you really want to put together a group of employees that'll take you to the Super Bowl and win it, whether you're selling it off or whatever you're doing, growing the company. And I was told this probably 7 years before I sold the company. The lawyer said, well, why don't you put together a program, since people never leave you, pick about 5, 6, 7 people that you are your core that are going to take you to the promised land. And so I did. We gave them it was a piece of paper that said, when we sell the company, here's what you get. And for every percentage increase over the sale of the company, here's what you'll get. We mailed it out. They came in the office the next day and said, are we selling? No, but when we do sell, you will be rewarded because you're going to hang in there with me. So at the end of the day, by the time we sold, we had about 11 people that were very near and dear to us that were running the company. The Pitney Bowes definitely needed for the transition. And I'm happy to say that we took over $800,000 out of the sale and divided it among 11 employees. And I had a lot of fun letting them know. I brought them all to a conference room like this, a little larger, and told them, listen, you have a letter at home. Please open up the letter, and in another couple weeks, you'll be getting a check. Because we had to really be quiet until then. So I'm really into the employees and taking care of your employees. I encourage all of you to do that. This is where Miguel and Tony have really, I think, do an excellent job, and where Wintrust in general does an excellent job on the traditional lending. these are the ways that we all kind of get money. The one I put at the top is, it usually starts off that way: credit cards, family and friends, and stuff like that. That happens a lot, and I understand that. I try not to start a company with more than $5,000 or $10,000. Like I said, 500 for the first one. But you go down the line. There's traditional lending like Wintrust, and they're an excellent bank. And there's a lot of banks out there, but they take an interesting approach to the small business owner, and I appreciate that. Alternative financing. There's a lot of people that are giving microloans out, a lot of companies, organizations in the Chicagoland area that are working with government funding and giving out. There's angel investors. I have if you look at the brochure, if you go to my website, I have an angel investment program that I write the checks, sort of like a Shark Tank thing. If people want me to invest in their company and be a partner, I'm looking to be an active partner in a company. And then you have venture capital and private equity. Those guys are in a whole nother world, and I don't get involved with them. But it's important that you have proper financing for growth. I put this up there because I think the younger generation, as I move forward, I'm always asking about and talking about, are you having a social impact? And I think that's very important now, is that you have a social impact. If nothing else, with my businesses, I've picked out 1 or 2 charities, and every month I write them a check. So whether you're helping society, you're helping your community, or you're helping the environment, it's important that you give back. Make that part of your business plan. A lot of companies are. And I think that you feel better at the end of the day when you lay your head on the pillow and say, I've done good. It's not about just the money. It's not about the business. And as you'll see in another slide, I think it's important that you give back to something in some way, shape, or form. And I think partnering up with Wintrust is a good example of that, because they are giving back to the community and working with the community on small businesses. I put this up here. I want to just take a moment. I'm not, I'm Jewish. I'm not that religious, but I'm very spiritual. I've never taken credit for the successes that I've had in life. I've been very blessed, and I think it's important that we all understand that our Creator has kind of put us in this position. You're very fortunate when you raise your hands and said you're a small business owner, you're an entrepreneur. You're blessed. You're not lucky. Luck, it comes probably maybe 5 to 10% in my life. I don't really look at luck. I don't play the lottery, and I'm just not that kind of person. I don't gamble. I don't believe in luck like I don't believe in failure. But I think you just have to take a moment and understand that our Creator really lays out our path for us every day that we wake up. And I wake up and go, so what's in it for me now? What are we doing today? And if I should remember that up and down of being an entrepreneur, well, when I have a low point, I go, is that what you intended today? Okay, I got to get out of this funk and move on, because we all get in that. But it's important, and I don't want to elaborate too much, but it's important that you let go of the past. If something happened, accept what you have, and just be very blessed for the future. And I can't emphasize that enough. I didn't know if I should put this slide in, but I put it in because I believe in it. And in today's times, we don't know how people take that, but I'm a big believer in that. When you're, I love this one because a lot of people don't even have an exit strategy. They aren't saving money for the future, aren't working with a business advisor from Wintrust to figure out what they do, or they don't have an accountant that is helping them plan their retirement. I think this pretty much sums it up. Plan for your retirement, save your money, and know what you're going to do with your money. I get a lot of chuckles out of this one because this seems to be happening quite frequently, and a lot of business owners don't save. And I want to go back before I end this, and I think it's when I meet up with family-run businesses, one of the questions I ask is, okay, who's really in charge? Well, the husband is, and the wife does this and that. And I go, so if, to the husband, I say, so if something happens to you and you pass on tomorrow, who's going to run the company and who the employee is going to answer to? And they go, well, my wife. Really? So your wife's going to run this entire company. She knows enough and is able to manage all these employees in a way that you have. Or the opposite, the wife, the husband, that's important that that's why you have to have your backup and have people around you that can run the company. So I think that, not only, that just reminds me of a lot of situations in small businesses where they don't have that kind of setup. And so, in summary, I think, in summary, let me just put this up because I didn't know who I was speaking to today, so I put up a little post, and I just wanted to thank you for your time. But I think some of the points are that, as a small business owner and entrepreneur, you have to not pull away, try to get away from the edge and kind of get more comfortable in the background and have people help you grow it, understand what the strengths of sales and marketing are. And I think that, once you go through a startup company or grow a business, you will see that it can be fun. You have to have fun in life. It can be entertaining, and it shouldn't be as stressful as it usually is. And I can't wait to hear your story because I know you have some great stories about being a business owner. But it's all about, sales, marketing, structure. If you're trying to solve a problem or have a solution for around the world and to problems, then come up with that solution, but build the company so they have so you can take it to the end game, which is either selling it or growing it. So I think that is my presentation. I didn't want to draw it too long because I wanted some questions and answers, and I didn't know when we'd get started. But that's the best way I could probably sum it up. What I'd like to do is open up to any questions or concerns or comments. If someone doesn't agree with what I have to say, please do.
First of all, thank you very much for sharing. That was fantastic.
Oh, you're welcome. Thank you. Thank you. Thank you.
A couple questions for you. First of all, you seem to have a lot of the fundamentals at play and are very good at executing those.
Mm-hmm.
The first question is, how did you find others that you knew, like in hiring, that were going to be very solid about fundamentals and doing things the right way?
That's important, and that's why I was able to build a family atmosphere and keep it fun, but yet keep it structured. As you grow, as you start to seek employees, or as you seek to build your infrastructure or build structure within your company, you're going to go through the interview process. One thing I didn't do is hire family, hire friends. My wife has never been involved in any of my businesses. I think that's why next month, 30 years of marriage is something to say. But I've really, I just kept interviewing. And then once I started hiring people, when I hired HR to handle matters, which is now being done online or through part-time people, they helped me in the process. Because you start hiring people because you think they're nice or they're friendly or you think they're going to do it, but the chances are within the first 2 or 3 years, whoever's on board, they probably won't be with you in 5 years. At least some of them won't be. So you just can't get too attached to them. You have to understand two things that I'm a big believer in. Well, first of all, understand that within human nature and with people and employees, there's about 15% of us that you'll never change. You'll never, ever change. So whether it's good or bad, there's 15% of whoever you are, it's not going to change. So I really learned quickly that, okay, they're kind of like got that thing going on, but I can live with that as long as they can do their job. The other thing was that you not only is it the 15% thing, but you just learn that when you hire somebody, you're hiring them for the task and the job, and you just want to, have them feel the same experience as you. You're going to go through a lot of hiring, and you're going to go through a lot of finding people to come on board with you. But you'll know within when I hire, I always tell people, listen, there's two things that's not going to happen. You're not going to make the money you're looking for, and you're not going to make the money you just came from. I'm going to hire at this. I'll see you in 3 months. I'll review you in 3 months, and I'll see you in 6 months. So after 6 months, you should be where you're at, and then come on board and let's take it forward. So you just have to understand the what's going on with people and finding the right people. But yes, you have you experienced going through multiple employees and
No.
Good for you. Good. That is good. That's good to know. Yeah, it was getting so big I had to hire HR just to make sure. But you will find out that the other two things that are important is understand people's strengths and weaknesses when you're meeting with people. I always took advantage of their strengths and just kind of tolerated their weaknesses. If they have a weakness, I would make sure they're not handling that task. I'd find somebody else to handle it. So I was moving things on from, I'd say, okay, they're not able to do it. I'm not going to fire them because they can't do it. That's not in their nature. So I'm going to move that to that person, and that person's now going to handle that. And not a year went by when I was shifting people. I took one of my first employees out of kind of running the company, and I put her right into the administration of the technology side, and she started answering to someone. After 10 years, she started answering to a senior staff member, and she wasn't happy with that. But that's a good question. I hope in a long-winded nutshell, answered it.
No, that's perfect. Thank you.
Yeah.
And then secondarily, obviously you believe that sales is the driving force of
Yeah.
the company, should be near the top. How did you start to build your sales compensation plan in terms of like a percentage?
I came from sales. That's an excellent question. I came from sales, so I know all about commissions. I knew all about motivation to sales, what drives sales, and what gets them to wake up and go, I'm going to work hard for him. So I had a sales background, but I think some people say, how did you get there? How did you think of that? I said, well, I just wake up, I think of something, and just try to execute it. But you have to find, you're going to go through a lot of this. By the time we were at the 21 million, I had actually somebody on the phone just doing telesales, just qualifying people to be part of our service so they can pass the lead on to the salesperson. So I had somebody inside just making 20 calls an hour, 50 calls an hour, just working that. But it's important that you recognize sales. If you're not a salesperson and you're just an operations person, not just, but if you're the genius and the founder of your company, then find a salesperson. You'll probably go through a couple because you don't understand how they think or how they work and how to provide incentives. But I gave you a few ideas of what you should do to provide incentives to them. But it is driven by sales. Sales drives everything. Sales drives everything. Any other? Yes.
Was the commission based on a first-year production?
Oh yeah, that's a good question. Once you start getting the salespeople on board, and I gave them incentives like they would have monthly goals. And I would have them peg themselves against their own goals, but I had contests so everybody would compete for the prize. But I had monthly goals, and I just hoped that they reached those goals every month. And then the question came up, well, are we going to keep on paying people for existing business or to get new business? So then we had to set up a policy where, okay, if you've had it for 2 years, we're cutting the commissions down to here, and we're going to force you, because salespeople have a tendency to get comfortable and make their money without really going out. So you got to kind of play that game and figure that out. So that's the issue that we all face with salespeople on commission. And what I did is, and I've encouraged my clients to do, is put salespeople on a base salary that everyone's kind of making the same. The base salary for all my salespeople was $25,000 a year, and the rest of it came from commissions. Because if you pay them $60,000 and you go do your commission, well, $60,000 pretty much covers their lifestyle, and you can give them incentives, but that's not the right approach. Like I said, I hire people less than what they were making and give them incentives to make more. I'll never forget, speaking of that, I hired because I would actually take my salespeople from my competitors. I would be at a trade show booth and go up to them, and then I had my national sales manager go up to them because I didn't want to go walk over the booth and ask them if they want to work for me. But I started taking my competition away. But the thing is that you want to give them the incentives, and you want to understand how they think. And unfortunately, salespeople find ways of sometimes not really working hard to make more money. That's a good question.
So for each salesperson, they're generating revenue, and you're still able to make a profit after year one?
Oh yeah, I set it up where they were making. I didn't want to disclose my profits, so the commissions are always based, and I encourage my clients to base it on their sales revenue, not profits. A lot of people go, well, I'll give you a percentage of the profit. Well, that means you expose your profit to an employee or a salesperson. They're not an equity member, so what's the point of that? So it's their sales revenue, and they would get anywhere from 2% to 5%. That was it. So if they brought in an account, and then I started looking at the margins of each account that was coming in, and we'd say, okay, but this account's only coming in at $10 a pound or whatever the deal was. Your margins, based on what you said, your margins are so small, you're only going to get 2.5% instead of 5. That's it. Because people have a tendency, what I always talk about, I post on my social media from time to time, is a lot of salespeople have a tendency of going after the low-hanging fruit on the tree. And I always encourage them to go after the top people, the top revenue people. They can produce tremendous income, but a lot of them don't have big margins. So great, you're going to bring in a $50,000 a year account, but you're only going to make 1.5% because I'm not taking on all the losses. You're going to share in the losses. Okay? So that's how I look at that. That's how I look at that. Is that somebody's phone? Thank you. My time is up.